Is BTT, Bittorrent, Tron, TRX, the bull market, BTC done? Is the bull market run over with? Is altcoin season dead? I'm going to get into all that in a minute, but first, if you're new to the channel, welcome. If you're a subscriber, thank you. I appreciate you very, very much. Occasionally, we do giveaways on the channel, and what I'd like you to do, if you're new, and occasionally I'm guilty of this myself, but as I say often, I'm getting very good at this, much better than I used to be. Hit the subscribe button, please hit the notification bell and the like button. I tend to sometimes watch videos, I used to do it more in the past, where I would watch the video, I would forget to support the content creator, I'd get immersed in the video, I wouldn't do those three things that are absolutely free, by the way. I'd forget and I'd leave. So before you do that, please hit those, and that's how we notify you. If you comment down below, we actually pick on the occasional giveaways. We pick you out of the comments as long as you've subscribed, hit the notification bell, and hit the like button. And listen, I know I'm going to give you some good value. If you don't like what I deliver, take it back. It's free. Take it back. Thanks for coming. Thanks for watching. Now let's go. So, we saw a flash crash and a real crash. There's no such thing as a fake crash, and that was, well, May 19th. I'm currently recording this at May 20th, and it is right now 6:47 Eastern Standard Time. So I'm going to get into, it's not going to be a technical video, but I'm going to get into a little bit of ins and outs that kind of pull the puppet strings and will make you feel better, because some of you have a deep understanding of this and some of you not much, and somewhere in between. So I'm going to start with, things can be funny if you let them be funny. You've got Charles here from Cardano, and I made a little back and forth here with Elon. So we start off with, Elon, please don't hurt me with your big brain. And we've got, change is needed so things can go higher. Consider this, and we also got Justin Sun here. Calm down, Charles, calm down. Consider that Elon Musk knows innovation comes from forced change. I learned this a long time ago, decades ago actually, and when change is forced, that's when good things, innovation comes much faster. And I think that's a part of the method behind Elon Musk's madness here. So, I'm going to move myself around for a second. Infrastructure of crypto markets still systemically broken. I don't think that the infrastructure is what it needs to be so that we don't have these violent moves downward. Do you think it's possible that Elon wants to see green crypto and feels that it's worth short-term financial pain for bigger financial gains? I definitely think so. Derivatives, exchanges that offer 100 times, 100x, guys, leverage. And this is a good portion of the crazy moves yesterday, the 19th, depending on when you're watching this or when I upload. I may do it the 20th today, or I may upload tomorrow. I'll see. Derivative exchanges offer 100 times leverage. Excuse me. This creates the perfect storm whenever there are events in the market that produce volatility swings that are large and fast. I'm going to switch to a Cointelegraph article that covers this very well. I'm going to do that in a second. On a day like May 19th, 2021, there was a perfect storm. All of the above were at play, and there was a collision. The result is plain to see. However, this is temporary and nothing to panic over. Really don't panic, guys. A lot of the viewers were panicked yesterday. I promise you, if you can keep cool, better days are ahead. You can't let yourself have knee-jerk reactions to the negative moves in the markets when they happen. It's healthy to see corrections, and this produces opportunities which anchor greater price growth. It's true. So, a little snapshot, and then we'll get to the article. Summary of May 19th crypto massacre with a May 16 to 19 snapshot of BTC price shown May 20th at approximately 624. Right now it's about 6:50 in the morning. So this is about 26 minutes ago, and this is where BTC was sitting. I didn't get into all the other currencies. I could, but I don't think it's necessary. You get the idea of where we sit at this moment, and here's what I want to go over with you. So I'm going to move myself over again here because I think it's better if I'm over here. Here's how Bitcoin's intraday volatility complicates leverage trading. So this is part of what made things go crazy yesterday. Derivatives exchanges offer up to 100% leverage, but traders must consider how Bitcoin's intraday volatility increases their liquidation risk. You know, because there is such a thing as margin calls, and a lot of those go out when the prices go crazy. There's triggers and levers in place, and it can cause a chain reaction of a sudden downward violent drop. And this was part of yesterday. So the crypto sector is in a bull market, and frequent evidence comes, and the thumbnail and what was in the slideshow and the article is Cointelegraph, because I probably won't complete the whole thing. So if you'd like to review it, of course, as I always share my sources, that's where you should go to access it. So the crypto sector is in a bull market, and frequent evidence comes from anonymous traders who post their 5, 6, and 7-figure investment returns as screenshots on crypto Twitter. This condition creates a FOMO-like situation where everyone gets greedy. The temptation to boost potential earnings by 20 times or more is often irresistible for most novice traders. FOMO is a dangerous thing. You don't want to let the FOMO lead you by the nose. Today, almost every cryptocurrency, okay, so today, this is May 16th. Today, almost every cryptocurrency exchange offers leveraged trading using derivatives. To enter these markets, a trader has to first deposit collateral margin, which is usually a stablecoin or Bitcoin BTC. However, unlike spot regular trading, the trader cannot withdraw from a futures market position until it has been closed. So, again, a trader cannot withdraw. I lost my place. A trader cannot withdraw the position until it has been closed. These instruments have benefits and can improve a trader's outcomes. However, those who often rely on an incorrect information when trading futures contracts end up with heavy losses rather than profits. By the way, I recommend, again, not investment advice, just my opinion, stay away from margin. Don't use margin unless you have deep pockets and are a very advanced investor. Please don't do it. It's a way to get decapitated. The basics of derivatives. These leveraged futures contracts are synthetic, and it is even possible to short or place a bet on the downside. Leverage is the most appealing aspect of futures contracts, but it is worth noting that these instruments have long been used in stock markets, commodities indexes, and foreign exchange FX. In traditional finance, traders measure daily price change by calculating the average closing prices. This measure is widely used in every asset class, and it's called volatility. However, for various reasons, this metric isn't helpful for cryptocurrencies and can harm leveraged traders. To be brief, the higher the volatility, the more often an asset price presents wild oscillations. Contrary to the expectation, moving up by 7% to 10% every day represents a low volatility indicator. This happens because the deviation from the mean is small, while random fluctuations between a negative 3% to a positive 3% present a much wider range. And the volatility can be nuts because conventional markets, as you know, close, right? The market opens at 9:30, closes at 4. The stock market, crypto doesn't close. It never closes. It just keeps going. And it's harder to pin down that volatility meter and to have some type of order. Not that the markets are so orderly, but they're orderly enough, the traditional markets, that they behave in a little bit of a different manner. And crypto never closes, so it makes it more difficult and a lot more swingy. So markets with very low volatility are perfect for leverage. Knowing the general range of how an asset oscillates is extremely important when opening leverage positions. Take the British pound sterling GBP, for example, and one will notice that its volatility is usually below 1%, as surprise aggressive daily price changes are unusual. FX markets are relative. Okay, so I won't get into that. I'll see if there's anything else here that I think you guys might find interesting, and if not, I will cut the video here. Let's see. What's interesting, by the way, and I was looking at this the other day, blockchain games have struggled to compete with traditional titles. When they get a grip on this is going to be another boom within the boom, and I think that this is something that has a very big potential within TRX and BTT for Bittorrent and Tron to certainly moon and hit price points that they don't get slammed down from ever again. And I think one of the keys to that are definitely the blockchain games. So, as usual, thank you for watching, and I hope this finds you healthy, happy. I will see you on the next video.